Hey, there we go. And we're live. Welcome everybody to the stream. Welcome to the Morning Monster. Your daily dose of, I don't know what. Truth, maybe? You tell me. What do you think is a daily dose of? What do you come here for? Let me know in the chat. Hopefully, you feel like I give you a dose of market reality, but I don't know. I don't know. I mean, I try. But sometimes I get lucky, sometimes I don't. Sometimes you feel like a nut, sometimes you don't. And if I could get the right thing open here. Market insight. That's fair. That's valid. I mean, yeah, market assessment. Yeah, daily dose market info. Yeah, grab your coffee, grab your monster. Let's talk about something that's simultaneously the most boring thing in the market and maybe the most profitable story in America right now. Talking about natural gas pipeline and natural gas production kind of simultaneously here. Now I know. If natural gas pipelines, how do we make any money off of that? Pipelines, really? This is what I'm here for. But, stick with me a minute because there is actually a multi-billion-dollar investment flow hiding in plain sight right now. It involves everything from Trump's energy agenda to obsession with ChatGPT, the AI boom, if you will. Yeah, I mean, it really does involve all of that. So here's the headline that caught my attention. All right. Trump era sparks the biggest U.S. natural gas pipeline boom since 2008. Think about that a minute. Now, before you roll your eyes and think, oh, yeah, it's just another puff piece, let me tell you the actual story here because potentially more interesting than you might think. Definitely more interesting than the headline suggests. And definitely could be more profitable. So we have a paradox. This paradox may make your brain hurt. So picture this. You're sitting you're sitting on the world's most valuable commodity, natural gas. You're so good at producing it that you literally have to pay people to take it off your hands sometimes. This is not hypothetical. This is the Permian Basin in Texas right now. Gas prices there routinely fall below zero. Below zero. Think about that. You pay people to take your gas because there's so much of it and it's coming out so fast. You're paying somebody to take your product. It's almost like it's a waste product. It's like being such a good baker that you got to pay people to eat your bread because your kitchen's just pumping out loaves of bread. So why does this happen? Because the Permian Basin is drowning in what's called associated gas. It's the natural gas that comes up when you drill for oil, and here's the kicker. There aren't enough pipelines to move all that gas to where people actually need to use it. So you've got this massive supply where nobody is using it hardly, and it's got nowhere to go. It's kind of trapped in this local vicinity. The gas kind of worthless. I mean, quite literally worthless. Worse than worthless because it's stuck in West Texas and you got to pay people to take it. Now, the solution, build more pipelines. And I don't mean like one or two. I mean the biggest construction boom of pipelines we've seen since the shale revolution in 2008. We're talking about a dozen major projects due to complete in the next year alone, boosting Gulf Coast gas shipping capacity by 13%. To put that in perspective here, that's roughly equivalent to Canada's entire natural gas consumption. One industry analyst said, and this is kind of a quote, "This is the most activity I've seen in 23 years in the industry right here." 23 years. This guy's seen pretty much everything. It's almost my entire trading life. And he's impressed by what's happening right now in this sector. So let's talk about who's actually building the pipelines, because this is where the investment opportunity starts to get a little bit juicy. The major players are names that you might recognize if you've ever looked at dividend-paying energy stocks. Energy Transfer, Enbridge, Kinder Morgan, Williams. These aren't sexy tech startups. They're boring, cash flowing, dividend paying workhorses of American energy infrastructure. Energy Transfer is building something called the Hugh Brinson Pipeline. 442 miles. 442 miles of steel and profit. They've publicly said that this will be their most profitable asset they've ever built. And why? Because of the rising demand from AI data centers. Yeah. ChatGPT has a habit of sucking in people, and it's literally being fueled by pipelines being built so that we can get natural gas, so we can do natural gas generators and generate the electricity that AI data centers need. Now, we'll come back to that in a minute because this could be wild. Let's talk about Enbridge. They're building the Rio Bravo line and the Blackcomb line. Kinder Morgan and Williams are expanding their system also. All told, we're looking at about $50 billion investment sweeping across Texas, Louisiana, Oklahoma. $50 billion. And this is not pocket change. I mean, we're building infrastructure for the next generation of American energy dominance type of money. And here's the beautiful part for savvy investors that are aware. These companies don't care whether natural gas is $2 or $6. They're basically toll booths. They get paid to move the gas regardless of what the price is. It's kind of like owning a highway instead of owning the cars that the Uber Eats drive on. You collect the fees no matter what, right? It's kind of like doing the Uber Eats where you get paid no matter whether it's a little order or a big order. Now, let's talk about the elephant in the room, that data center, right? Or should I say the gas-guzzling monster. Everybody's excited about artificial intelligence and how it's going to be powered by nuclear, but nuclear takes years to get online. We could build a natural gas electric generator in months. ChatGPT, all these image generators, video generators, the AI agents, all the cool stuff that everybody's talking about. But what nobody's talking about is how we get the power. Like, what's the real solution for power? This stuff is absurdly hungry for power. And traditional data centers use 5 to 10 kilowatts per server rack. With these going, it's like looking at a Sam's Club times 100. Or Costco, if you will. An AI optimized data center, well, they cranked this up to 11. 60 plus kilowatt hours per rack when you stack the GPUs in there. That's 6 to 12 times more than the regular data center for the same physical space. All that power has to come from somewhere, and it's not coming from solar panels and good vibes or nuclear anytime soon. It's coming from natural gas power plants that they can spin up quickly. That's what we're filling the gap with right now. Right now, data centers account for about 4% of total U.S. electricity use. By 2030, that number is supposed to be more than double to 8, and natural gas is scheduled to meet 40% of that expansion. So when Silicon Valley tells you they're building the future, what they're really building is massive, insatiable appetite for natural gas and the electricity production from that. And the irony, many of the same tech companies that have been pledging to go carbon neutral, well, good luck with that when your AI models need more natural gas than a Texas pickup truck convention. I mean, and here's a stat that'll blow your mind. By the end of 2026, data centers could account for 2.5 billion cubic feet per day of natural gas demand. That's up from 0.8 just the year earlier. That's more than 3 times the growth in 2 years. And guess what you need to move all that gas to where it's going to be used? You got to have a pipeline. Lots and lots of pipelines going to all these different places we need it. Now, about that headline mentioning Trump. Well, full disclosure, most of these pipeline projects were planned and started long before Trump ever came to office. But and this is kind of important right here, the timing does align with his administration's push to expand U.S. liquefied natural gas exports, LNG. And Texas and Louisiana regulators, who are famously friendly to fossil fuel infrastructure, have been speeding up approvals at a record pace. In government speak, speeding up means, well, we're only taking like 6 months instead of 2 years to approve some stuff, which is practically warp speed in bureaucracy. The bigger picture here is that America is positioning itself to become the world's natural gas station. We're already the largest liquefied natural gas, LNG, exporter on the planet, and companies like Chenery Energy, Next Decade, and Venture Global, well, they're sinking in tens of billions of dollars into new LNG export terminals. Think about it. We've already got one of the biggest ones in the world, and we're going to build more. These terminals are scheduled to come online in 2027, maybe 2028. And they're going to need, guess what? Pipelines to get the gas to the terminals. So you've got 2 massive demand drivers happening at the same time: domestic AI data centers and international LNG exporters. Both of those are going to need more natural gas capacity shipping to them. Both need pipelines, and both are growing like crazy. It's pretty wild. But here's where the story takes it up a notch, and where the smart money should pay attention. Goldman Sachs just released a report warning about what they're calling the largest ever LNG supply wave. Think about that for a second. This could hit global markets in the coming years. And their outlook is basically, we're going to have a big boom, we're going to have a bust of too much natural gas, and then we're going to have an even bigger boom after that. So the timeline on this thing, from now through 2027, things look pretty darn good. Natural gas prices should stay pretty stable, if not climbing higher. Henry Hub, that's the benchmark for U.S. prices, is expecting to average around $3.90 to $4.30 per million BTUs, roughly. U.S. LNG exports remain economical. Pipelines get built. Everybody's happy. Live happily ever after. But when it comes to 2028 and 2029, things could get a little bit spicy. Goldman is predicting that LNG supply growth will far outpace the demand and far outpace the ability to get it to people that need it. European storage might be 30 to 40% above capacity. That's 30 to 40% of the gas that has nowhere to go. And to prevent total gridlock, prices might have to crash. And I mean, we might see the cheapest gas we've ever seen. Goldman's forecasting Henry Hub could fall to 270, 275, maybe 160. That's a bloodbath in natural gas. What happens when prices crash that hard? U.S. LNG exports get canceled for several months, possibly. It won't be economical to export gas at that point. So that gas stays in the U.S. market, which pushes domestic prices down. Could be a vicious cycle. Pain for producers, but potentially a massive opportunity for contrarian type investors who know how to time this thing. But here's the kicker. Goldman says, after the bust, we're going to have a structural rebound, one that clears the glut in the gas market, the gas glut. And in the early 2030s, maybe even out to the mid 2030s, the low prices will have planted seeds for massive new demand. China's decarbonization push and Asia's broader industrial expansion could add over 100 million tons per year of new LNG demand by 2035. When that happens, prices could get tight again. Henry Hub rebounds, maybe 450, 5. This could be in the 2030s. So the playbook: ride the wave up through the 2027 pop, brace for impact when 2028, 2029 happens, and then position for the structural bull market in the 2030s. Easy, right? Simple. Great plan. But maybe not so easy to stick it out. But at least you know the roadmap. All right, so tactical. How do we tactically play this? If you're convinced the story has legs, well, maybe it does. Seems to have a lot of investment in it. First, the pipeline companies. These are your safest, most boring, most dividend-paying plays. Energy Transfer has a 7.8% dividend. Crazy. Enbridge has been raising its dividend for 30 consecutive years. That's a pretty solid one. That's a, dividend achievers right there. And yields a 5.6% right now. Enterprise Products Partners yields 6.7%. These companies have stronger balance sheets than they did before 2020, and nearly 98% of their earnings come from stable fee-based contracts to move this gas. They're not going to make you rich overnight. They're going to pay you handsomely to just sit on them. Think of them as a dividend aristocrat of energy, boring, reliable, and quite profitable. Now, the second way to play, LNG export companies. This is where you need to be a little bit more strategic about how you play and the timing. Chenery Energy is the market leader with a $45 billion market cap. Next decade is smaller, but growing pretty quickly. Has a strong buy recommendation from analysts. Venture Global just went public and building infrastructure facilities in Louisiana. All three companies benefit from something called market indexation, which means they profit when LNG prices rise. The catch, they're going to feel major pain during 2028 and 2029 if we hit this glut. So, if you're a long-term investor, you might want to wait for that dip and buy when everybody else is panicking. But you could take advantage of the short term now. Just remember, 2028, 2029, we're probably going to feel some pain. And the third way you could potentially play is if the natural gas producers themselves have opportunity. This is probably the highest risk, highest reward option. You don't want to ride prices up through 2027, exit out before the crash, and then re-enter during the capitulation phase for the 2030s rebound. This requires perfect timing and nerves of steel, and it's not for the faint of heart. Now, we could zoom in for a second. What we're really witnessing here is the infrastructure build-out for America's next chapter as energy superpower. We're not just producing gas for ourselves. We're exporting it to the world. We're powering the AI revolution. We're replacing coal in Asia with cleaner burning LNG. And there's the irony. The fact that environmentalists hate this boom while simultaneously loving this boom because it replaces dirtier technology. And, cognitive dissonance is, as the kids say, the chef's kiss of opportunity. There's the thing. Whether you love it or hate it, it's happening. It's happening, sweetheart. These pipelines are being built. The LNG terminals are being built. The data centers are being built, and they're consuming power like there's no tomorrow. For investors who understand the cycles, the booms, the busts, the bigger booms, the bigger busts, there's money to potentially be made. So here's my challenge where you don't just scroll past boring energy headlines, dig into the story, understand the players, know the timing. Because while everybody else is chasing meme stocks and crypto coins, then smart money potentially positioning itself for an unglamorous world of pipelines, LNG terminals, and natural gas infrastructure. As one Enbridge executive put it, natural gas is definitely on, and the country is thirsty for it. And if the country's thirsty for something, well, somebody's going to make a fortune selling the drinks. So, building those pipelines, we got to get the gas to them. So, that's it for my monologue today. Be careful out there. Be strategic. You may lose money. Black Friday sale is on at TradingView. Just a reminder, get your piece. And all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to buy or sell any financial instrument, including any of those stocks, any stocks, options, bonds, forex, futures, cryptos, treasuries, bonds. You may lose money if you trade them. If you desire personal financial advice, hire and consult somebody that can do that for you. We have a short week this week. Happy Thanksgiving, everybody in the U.S. We've got pretty much nothing today on the news front. Tomorrow we get core PPI, core retail sales, PPI, getting this data dump tomorrow. Wednesday we get another data dump. This could turn what was going to be a boring week into a pretty crazy week here. Tentatively getting PCE right on top of PPI, CPI maybe, preliminary GDP. This could turn out to be a spicy week. We got Thursday, the markets are closed for U.S. Thanksgiving. Friday, we get a half a day, early close at 1 p.m. for normal equity markets. Futures are open on Thursday, by the way. That'll be interesting. Equity market's closed, though. Crypto's still going. I won't be live on Thursday. I'm going to hang out with my family. Be back on Friday. Same bat time, same bat channel. Gotta love the Thursday holiday. And then Friday half day. Thanksgiving week has never been a banger week for me. It's not one of those weeks where it's like, man, I'm going to make a ton of money. But this chaos could present opportunity. See what happens. I'd be cautious this week. That's the big Tuesday, Wednesday data dumps right into Thursday holiday. Yeah, be careful. You might lose some money. So how do we play? What are we expecting here? Let's see. ES barely held on to the lows. We haven't really broken out the new highs yet. Still kind of below this line I threw out here. I guess that was just outlining where I thought we might go next. It's potential that this was done. Like this downside had potential to be done. We poked in there and we just kind of hung there on Friday. Look at the bigger picture. I kind of expected this to play out and we go higher. Maybe back above 7,000. Maybe into the beginning of the year. So Santa Rally could be back on, despite a lot of people thinking that we did away with it. So we'll see. It looks like we've sufficiently bummed out a lot of people in the market. Bounce week, 60% yes, 40% no, 78% of you voted. Let's see. Let's ask another one. Kimberly's here. She'll hate the way I wrote that. Or dislike, I should say. Welcome, everybody. I'm not a fan of how they changed the names here, but welcome, Don, Craig, Rob, David, Joseph, Tiger, Caroline. Yeah. I like the names they had before. Frank. Now it's incredibly difficult to remember who the heck is who. Welcome, everybody. And So still got potential on the upside. NQ, this is NASDAQ. I look at the futures, in case you haven't been here before. I like to look at the futures because they pretty much have complete data. But because when you look over here, there's a big gap. But on futures, we actually kind of backfilled that gap a little bit. And when you look at the lower time frames here, there's constant data, right? We reopened yesterday at 6 p.m. and kind of filled all that data in. Cash index, there's just a gap. Like we closed here on Friday, we opened here today, there's a gap of missing data. So I kind of pop over, look at the futures to see if I can glean any additional information. We've got this resistance on the 1 hour coming up. That'll be the next upside we've got to break through. And then we'll have this one up here. If we can get through that one, this could turn around into something more meaningful. But this is starting to look like 5 up. We may see a 3-wave retrace. We want to hold a 618 in here to propel us higher. And what does the 618 mean? It means you have this low right here. You potentially have this high at the 1 hour. We might see more, it feel like more chop, but it pushes back down here, back around 6,600. And that sets up the ability to bounce off of that level right there, if we can hold it, and go higher. The projection on that would look something like, here's the low, here's the potential high, there's the low. That next move, assuming we can hold that support, assuming we hold this resistance, that could be the potential path back to 68.60. Then we probably do another pullback and then set up more higher. Now, I'm not predicting time on this, and that could all just be the first move up, and then we get a nice big fat deep retrace after that. So we could be looking at this come back down here, this come back up here. Oh, arrow, please. This come back down here. And then set up the next move. Something like that. Could be what we're looking at for the next several days. We'll have to see what actually develops. NQ coming up nicely. Resistance right here for now. If we can get above it, probably go test the high from right back over here. Russell. This is setting up a pretty beautiful play right here. If we break through this 618 right here at 2460, that little high, you know, this is like a zone right there between the 618 and that kind of top right there. If we can break through this zone right here, we're setting up for that pop, 2600. I already put on a play for that with IWM. IWM is like the spy of Russell. You could buy in here like 240, maybe 255. You know, buy a 240, sell a 255, and if we rip right on through, money, baby. I'll probably play that out to January. Oil still pushing lower. Still expecting this to take a dip down to the low 50s, which could kick off some sort of hot war in the Middle East. Natural gas climbing higher. Nice. We didn't do the breakdown. I like it. It did make a lower low there. That was ABC. That was ABC right there. But that's starting to be 1, 2, 3, 4, 5 up. Look at the move off the low. So we'd be looking at a potential top in natural gas right up in here, which would kick off another retrace back down in here. Maybe out to next summer. which fits the timeline here. We get these pullbacks, March. Yeah, it could happen March, May. It could be a pretty fast pullback after, we could spike this here in the next month or two. And then be looking at a 3-wave retrace back down here in the March, April, May. And then kick off the next spike even higher. That's potential 5 up. So that move, that retrace, maybe go a little, just a smidge deeper to make that better. That next move, that'd be pretty spicy. And they're not expecting that high move, but that's what the chart could support. That'd be pretty wild right there. It may just chill the heck out. So we do have a seasonal cycle on natural gas. So Goldman was expecting a big boom, or a big boom for the next, say, 2 years, and then a big bust 28, 29 right in here. A bigger boom here, bigger bust here. So this higher, this even lower, and then a structural demand pop in here that's not priced into the market. See if it actually plays out. Gold. Be very, very careful. Still potentially has this ability for this to be an A. Stopped right on the 618. B. 1, 2, 3, 4, 5. And that could take us down to the roadmap line on the daily chart down here, 36.10. Bitcoin, are we done? That's the big question here. Did we find a bottom? I like this candle. That's very indicative that we had bottoming action. But we need continuation. We pushed down below ideal support, got down to some crazy levels, but we got to turn it. We got to hold it. We did back test the lows of the year. Bitcoin for the year, basically sitting on zilch. Slightly under, in fact. Look at it right here. Down 10% for the year. After having a bang in 23 and 24. Usually this time of the year is pretty bullish on Bitcoin. Not so far. In fact, the whole year has been kind of lackluster, really, even though we pushed to new all-time highs. It's kind of a lot of big numbers. We got into a point where the market cap of Bitcoin was big. It takes a lot of money to make it bigger. So we're just seeing this kind of chop around a little bit. I think we have potential to be done here on the downside for now. Now, the risks, if you will. Let's kind of remove a few lines, talk about it, what we got cooking. We've come down into that ideal support zone, clean it all up. Got a little deeper. These highs will be important, but right now, the thing to watch, there's your high, here's your low. If we can manage, muster, build a bounce out of this price action here, the level, got to watch is right in here. Got to get back through that. Got to get through the roadmap line. Got to get through that. If this happens fast, that's great. If it takes slower, out later toward the end of the year, maybe rides with the Santa rally. We have potential to come up here. Breaking above that 618 would activate this 75% likely to go on up to 134. 142. Above that. And The big target, 166. So we could, in fact, still manage a pop right up in here in that target zone, 150 to 170. It's still potentially in the cards. Nothing's epically broken yet. For those that maybe didn't trade Bitcoin or didn't pay attention to Bitcoin, back here, we had giant big swings. That was 55% right there. Flushed it out, came right back, made a new high. Couldn't manage to push it out further though. Smaller scale, we had this high down to this low, 31%. That's more in line with what we just did. At about a 33%, you know. Bitcoin's on a Black Friday sale, 33% off. All-time high. May not like to look at it that way, but here was the high. Here's where we're currently trading, right in here. 33% down, basically. Go all the way to low, 35% down. So if you still believe that we potentially have upside left, that's what you got. Now this looks a lot like that was an A, a B, and a C. Sufficiently bummed everybody out about Bitcoin. And it may be an indicator, like if it starts ripping a little bit, could be that we're going to get that FOMC cut. Global liquidity is going to expand. On December 1st, they're supposed to turn back on the money printer and start doing easing. Done with the tightening cycle. So we'll see what happens. Bitcoin could lead us out of here. Ethereum got freaking close to that target right there. And this is another reason why, you know, here Friday morning, I said, we may not be done on the downside unless we get down here a little bit on Ethereum. And that was freaking close enough. Like that counts. That was close enough. Now it still could go deeper, but 3 green candles. I'd like to see some continuation back above this, back above that, back above a lot of things. It's the first sign that we're done on the downside, at least for now. NKD, scratch the top of the target. I'd like to see this turn and burn and get higher. Probably take Bitcoin, Ethereum, and US markets with it. Supposed to fire up the money printer in Japan soon. This may have some resistance right up here about 101 and still could go down. Like, I'm not a big fan of how this keeps overlapping these expansions and corrections. They just keep overlapping right here. That creates uncertainty in my mind. Even though I did tag a slightly higher tick, significant resistance here. We'll break that back below this area. 98.5 was kind of my level. If we get below that, we're probably going lower low again. Apple dumpling. Still sitting under the high. We spiked it back here on earnings. And when stocks do this kind of pattern, usually that means they're going to have some sort of dip before they go higher again. Amazon holding on to the roadmap line so far. If we dip back, you know, right now, this is a test of that downtrend right there. This relatively weak downtrend of highs. Back tested it here, back tested it here. This can shoot us off to new all-time highs. Google cruising on up. Next upside, 337. Meta. Potentially that was the bottom. They gave you a few, gave you a chance. Probably going to add something for supercharged alerts. It's a nice potential bounce. Microsoft. Uh-oh. Down on the sauce now. Look at this for, gosh, since we topped out back here. Been talking about this correction If we don't hold it here, we're going like meta down to the 618, back down around the low 400s. NVIDIA probably needs to push on down in here, tag that roadmap line. Tesla, this would look best with one more dip here. Pushing out full self-driving 14.2 over the weekend to a bigger cohort. It's supposed to improve, drastically improve over 14.1 point whatever. And we'll see. Getting closer and closer to the car driving and you not having to pay attention. Lots of influencers over the weekend reporting that you can actually play with your phone and it just keeps driving. It doesn't bug you, doesn't nag you. See how well that plays out. Netflix, well, the split played out. Already down here. Potential to come on down to 100. We're already in the target zone. It happened way faster than I thought it might. So this could wrap up any time in here. May have a little bit more downside to go. We'll see. I wouldn't buy the knife yet. I'd wait for a bottom to form and maybe some sort of move up, retrace, hold a higher low, confirm we're going to go higher, maybe get above the daily roadmap line. I go pull gainers. Things are popping in the pre-market. I go pull decliners too, which are down here further, and look for opportunities here. So usually the biggest opportunity is not in the gainers, but this is starting to look like a reversal that played out. Let's turn off that. Looks like an A, B, C. Although 1, 2, 3, 4. It looks like we may have a little bit more downside potential there. ASML. If we can hold on to this 950 area, we could be looking at 1200 on the upside. Google, we already talked about 337 upside. Light. This might be a better play than Palantir if you want to believe that this is going to rip. Carvana. Be careful. We're stuck on the roadmap line. This is not a sign of strength right now. This could easily take another spill down. AppLovin, roadmap line bounce finally. Here's the high, here's the low. Get back above the 618, 792 upside. Molina. I don't know. Are we done yet? This may need to spike down here, 107 area. Be Biogen. Starting to look like a pretty violent reversal here. Big downtrend. Need to kind of see this break through. Line up with the highs. Gonna have to break through that 200 area to get a substantial higher. AVGO still would look best with another hit of the roadmap line, but it may not. It may just sit in this consolidation and pop again. The next upside, 455. UNH would look best with a hit down here around 283. CLS look best with a touch of the roadmap line. BABA would look best with a touch of the roadmap line. SNDK would look best with a touch of the roadmap line. MU, same. CRWD, same. GE Veranova, that is a potential roadmap line bounce. Get back above the 617 area, 700 on the upside. Coinbase, now this is a beautiful ABC correction right to the target. I almost can't believe how beautiful that move was right there. Let's clean up a few things off this chart. Cool. Got some alerts kicking off in Discord. Here's the high. Here's the low. So we're looking at resistance. I just made a trade, apparently. Looking at resistance right here. Get through. Looking at 485 up here. AVGO just kicked off a 30-minute bounce. COHR. I want to see that come on down. CIN. Let's pretty frothy right there. Last time we hit back in June. LIF, Life 360. Here's the high, here's the low. This looks like a pretty nice three-wave retrace. First move down, retrace. Oh yeah. This could be done. Turn back higher, break through 91. Could see 120 on the upside. Humana into the target zone. Looking for this to build a reversal here. Need to move up or retrace, and continuation can set this thing up for a pop up to 470. Baidu hit the roadmap line. If we break back up through the 130 area, we could go 150, 160. Reddit, looking for this to hold here, turn back higher, 234. Set us up for 299. LEU, here's the pullback. If you don't understand the pattern I'm doing here, click the link here, go to my channel homepage, watch the video on this market roadmap line right here, the orange line. It's my favorite indicator. I use it all time frames. When we get price action that, it's been ripping like this, we come back, we bounce off of it, come back through a 618, 75% likely to hit that purple line right there. 75% of the time we hit that purple line. The other 25%, we come down and break lower. That's across all tickers, all time frames. Anything that has price action pretty much does that. Now, there are some that are more reliable than others. Every day I kind of pull up a list of these on the daily chart and we hunt for opportunity. Like that one didn't actually hit. NVO. Oh, these are decliners. Oops, sorry. Setups. ATRC. This one right here. Turn these on. Take a look. Here's the high. Here's the low. Here's the entry. 39.37 potential. Let's go with all the time frame. So that one under 30 trades is not statistically significant. CTBI, so you just fall back on the historical 75%. Here's that, here's that. Didn't actually kick off yet. Actually, Python is what I use to find these, and it grabbed that high right there, which probably be a little more conservative. I like to be conservative on these. 56 would be the entry. 26.73. If that one fires off, it's probably a pretty good one at 61. DIN. Let's go with here's the high, here's the low, there's the entry, 30 in the target. Not a bad one right there. EBC, Echo Bravo Charlie. Here's the high, here's the low, there's the entry, 1943. Doesn't have much history on that one. EHAB, very little baby bounce right here. That one might play out at 9. Low price stuff under 20 bucks is not as reliable. ESNT. Cool. Does not like ESNT. All right, come back to that one. Hershey's, this is a pretty nice one right here. 35 trades in the history, 88% profitable, 1.6. This one tends, what does this mean? 35 trades means we have a statistical population here. When it's above the average, well above the average, like I really like to pay attention to them when they're above 80. That means that more often than not, this does a trend pullback continuation pattern and hits the target. Average profit factor 1.66 right there. Now, if you only do one trade, it's kind of a gamble. It's 50-50, right? Like might work, might not work. We don't know. Stop is $1 below the low, always. That also affects low price stuff, down under 10 bucks, that gets to be 10% stop loss. But up here at 170, it's like 0.5%, 0.6%, something like that. So there's your stop. Here's your target, 202. Hershey's pretty sweet one right there. Kalic, KLIC. algorithm fires off here. Here's the high, here's the low. There we are, 45.16 target, 36 trades, 83. Another good one right there. I'd like it better if the profit factor was over 2, but that means the gains will exceed the losses. Here's the, in case anybody doesn't know what profit factor is, it's the amount of money that a strategy made for every unit of money lost. So for every dollar you lose, you make this much money. So anything under 1 means it's a net loser. This one has the target 2070 on the upside. Pat K. So I'm going to say it picked up this high since this was below the roadmap line, and that right there, the 108.58. But if you want to be more conservative, I'd wait for the bigger bounce, move up through 108. And so the 108 could get you in for, you could play with an aggressive entry here for that 108.21, move up your stop, and then ride it on up to potentially 119. Not the craziest one, though. That one may or may not be a trender. That's a bunch of sideways choppy stuff right there. Kicked off an entry back here, never played out. Kicking off a lower entry back here. Be very careful on stuff like this. I don't like this choppy sideways action here. But 23.45 target, RVLV. This one's in it from back here a couple weeks ago. Did another little baby bounce. Again, just choppy sideways action. 24 target. Just not that crazy. STC. Nope. I grabbed the wrong high. That high's higher. There's the entry. 79.79. Target 25.76. Yeah, not the best. Texas Roadhouse. And downtrend, be careful. This kind of counter trend right here. Same pattern, doesn't really matter. I personally don't like it because of the downtrend, but that doesn't mean it won't work out right here. 184.70 targets. But I don't like the price action all kind of under the roadmap line. That's a downtrend. This could easily go on down. It could easily be a roadmap bounce upside down right here. Break down below the 618, get continuation lower, down to 151, 150, this area right down here, 153. These patterns do work on the upside down. That was it right there. So we're at a downtrend, but I don't play the downside because the market doesn't tend to go down. So that's counter trend. I don't like to do that. Look at it. Downside opportunities here. NVO. Well, lower low. Thought we might do that. Let's see. Take 2 interactive. Back to the roadmap line. This could be opportunity to go again. Be watching for that to bounce. Here's the high. Here's the low. Fill the gap. And 270 on the upside. ALB. And that's sitting at resistance. GRND. Whew, I don't know. How low can she go? A long way down. Be careful. This potential low right there. Oop, pan the top off. High right there. Yeah, we could be coming on back down to 9 on GRND. And SBIT, if Bitcoin bottomed here, this may have topped here. Short Bitcoin, ultra short, leverage short Bitcoin. If Bitcoin topped out, if Bitcoin bottomed out with this drop, this may have topped out and we may see this violently retrace. Strike it, reverse it. And bias for the day, I think today we rally on. Resistance is right up here. And we'll see what cooks. I kind of drew the path. We may top out in here at the 1 hour. So we do have a little bit of resistance here. If we don't find the resistance there and turn down, probably come on up here and hunt for a resistance. That's what I see right now. Be careful out there. And this will be the support level down in here. around 6,600. So we got that resistance right around 6,700 and then 6,780 on the futures. How does that correspond to cash index? Here you go. Same kind of levels here. Got 6760. We've got that 6720 here. And then we don't quite have the same retrace right now, but 6,600 on the downside. If we start getting down below 6,600, watch out for a retest at the bottom and maybe an extension lower, because we still have this head and shoulders that could play out down here to 6,300. That's the path. All right. Had $18,000 of options expire. Worthless Friday. Yeah. And just be careful. Be careful, David. Be careful, everybody. The account you save may be your own. See you again tomorrow. Same bat time, same bat channel. Hunt for opportunity again.